In order to make money on the Forex market, you have to buy low and sell high. Quite simple. Let's have a look at the example. How much money can you theoretically make by trading currencies? Let's assume that you have 1,000 US dollars on your trading account. The current exchange rate of euro versus the US dollar is 1.25. In other words, for 1 euro, you get $1.25. You forecast that during the day, euro would rise versus the US dollar. Based on this forecast, you buy 800 euros for your $1,000. Your forecast is correct. Euro rises from 1.25 to $1.26. Being in the profit, you decide to close the trade and exchange 800 euros back to $1,008. In effect, your profit from this trade is $8. Not that much, right? You raise a fair question. Would it be possible to increase profits? In order to maximize your profit potential, you can use leverage. Leverage is a loan Armada Markets provides you to trade Forex. The size of the loan can differ, but Armada provides you with up to 500 times more funds than your initial capital, which also increases your profit potential 500 times. Great, right? Still, please remember, increased leverage means not only more profit potential, but also more risks. Managing your risks is very important. Let's have a look at an example of how to use leverage of 1 to 500. You have the same $1,000 on your account, and you estimate that euro will rise versus the US dollar. Therefore, you decide to take the biggest possible loan from your broker, $499,000. Now, with the exchange rate of 1.25, you exchange all of your $500,000 to 400,000 euros. At the moment when the exchange rate rises to 1.26, you exchange the 400,000 euros back to $504,000. As a result, you now have $5,000 on your account after returning the loan to your broker. So your net profit is $4,000. An incredible result after just 1 day of trading. In this example, we have looked at the scenario when your forecast turns out to be correct. But what would have happened if instead of rising, euro had fallen against the US dollar? In this case, your trade would be open until your losses equal your initial deposit, which is $1,000. At this point, your trade would be automatically closed and the broker takes back the loan. Consequently, a case when you can lose the broker's loan is almost impossible. Taking everything into account, you have now seen how leverage can increase your profits if you make the right decisions. At the same time, leverage can also work against you if you make the wrong estimations and don't limit your losses. Let me tell you why I trust Armada Markets. Armada likes to see clients succeed in trading. Your funds are safe and segregated. Armada's low Forex spreads, or the difference between buy and sell price, increase your profitability. You can test your trading skills on global markets with a small initial deposit of $100. You can use leverage of up to 1 to 500. Armada allows all trading strategies, including scalping, news trading, and arbitrage, and also executes trades in extremely short time. This is why Armada is highly respected in the Forex community.